Breaking news out of Washington. Could mean temporary relief for mortgage rates. The administration announced on Thursday a $200 billion plan to buy mortgage bonds. We're already seeing rates dip to 5.99%. But here's the question every homeowner should be asking. Will this actually help you, or is it just a short-term Band-Aid? I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Here's what you need to know. This bond buying plan might give us a brief window of rate relief, and I mean brief. The last few times we've seen opportunities like this, they lasted just a few days, not weeks, not months, days. We're seeing rates at 5.99%. That's the rate, not the APR. We're just going based on Mortgage News Daily, what they reported. Now, not everybody qualifies for that rate. Your rate depends on your credit score, how much you're putting down, what type of property you're buying, how much equity you have. Some people will get a rate better than 5.99. Some will be higher. But if you're a homeowner carrying a rate over 6.5%, this could be your moment. You need to move quickly. Let me give you real numbers. I ran the math for a family owing $700,000 at 7% interest. If they refinance today at 6%, they'd save $400 per month. That's $4,800 a year back in their household budget. They called me asking, Ron, should we wait for rates to drop even more? Here's what I showed them. If they waited for a year, hoping rates would drop to 5.5%, they'd actually lose over $4,800 by paying that higher rate for 12 more months. Think about that. Waiting for a slightly better rate cost them thousands of dollars. And that's assuming rates actually drop, which isn't guaranteed. Strategy beats rate always. Now, if you're already working with a lender on a mortgage right now, listen carefully. Call them today. Ask them about improved pricing. These windows don't last long. Your lenders should be monitoring rates for you, but you need to have that conversation. Don't assume they'll automatically give you better pricing. You need to ask. If you're buying a home in the next 60 to 90 days, pay attention. This might give you a brief opportunity, but here's what's really happening behind the scenes. The Federal Reserve is not cutting rates anytime soon. Looking at the CME, there's a 95% chance they hold steady at their next meeting. The economy is actually doing well. GDP just doubled to 5.4%. Unemployment dropped. Inflation staying below 3%. So this bond buying, it's a temporary bridge, not a long-term solution. Remember, the last few times we saw these rates dips, they disappeared within days. The market moves fast. If you're sitting there thinking, I'll wait and see what happens next week, you might miss your window of opportunity. That's why we have given you rsrlinks.com/what's your number. rsrlinks.com/what's your number. Here's what most people don't understand. Your mortgage rate is only one part of your financial picture. What really matters is your household blended interest rate. That's all your debt together. Now look at this one, rsrlinks.com/two-step. rsrlinks.com/two-step. Let's say you're carrying credit card debt at 22%, a car loan at 8%, and a mortgage at 7%. What's your real cost of debt across your entire household budget? Maybe refinancing that mortgage to pull cash and pay off high interest debt makes more sense than waiting for rates to drop another quarter point. That's where suitability comes in, not just eligibility. Most people focus on, can I qualify for this loan? The better question is, does this loan fit my overall household strategy? If you're a home buyer, don't let this news paralyze you. Yes, rates might dip temporarily for a few days, but if you're ready to buy and the home makes sense for your budget, don't put your life on hold chasing the perfect rate. I've seen too many families sit on the sidelines for years waiting for the perfect moment. Meanwhile, they're throwing away rent money every month, or they're missing out on homes that would have been perfect for their families, or prices go up faster than rates come down, and they're worse off than when they started. Here's the real question that you should be asking. What makes sense for your household budget right now? Not in 6 months, not in a year, right now. If your current mortgage payment is straining your budget and you can save $400 a month by refinancing today, that's real money. That's breathing room for your family. That's cash flow you can use to build wealth in other areas. If you're sitting on a rate above 6.5%, let's look at your numbers right now, not next week, right now. These opportunities don't last long. Go to rsrlinks.com/2ndlook. rsrlinks.com/second look. That's 2ND look. And we'll take a second look at your situation. We'll show you exactly what you could save and whether this window makes sense for your household strategy. If you're already working with a lender, call them today about improved pricing. And if you want a second opinion on what they're offering, that's exactly what our Second Look Advantage program is for. This bond window news might create a short window of opportunity. Again, seeing rates that were reported at 5.99%, but based on what we've seen before, you've got days, not weeks, and opportunity only matters if you actually act on it. Remember, strategy beats rate always. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. That's the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com. Thanks for listening.